What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 11th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to take a big macro view on the crypto market and try to understand where we are within the current Bitcoin cycle, and therefore, what kind of price returns can we expect going into 2022, generally when we expect that the cycle might top. We've got lots of things to dive into. It's going to be a really informative video, guys. I do want to share one quick thing, though. It's not sponsored or anything, but I want to share a quick update. As many of you might have heard, we've launched the closed beta for Digifox, my app that I founded back a couple years ago, and we're launching this new feature called Get Paid in Crypto. It will allow anyone in the United States to receive a portion of their salary in the form of crypto, and for the beta participants, we're entering everyone in for a chance to potentially win up to $1,000. So if you're interested in winning $1,000 of Bitcoin, check out the Twitter link down below in the description. You can enter in for a chance to win. So not a bad deal. It gives all the instructions in the thread, so make sure to read through that so you guys know how to enter. But I digress. Let's go ahead and kick things off here, guys. Now, I want to start off by taking a look at Bitcoin, and then we're going to go on towards looking at altcoins and the entire market as a whole. And as you'll notice, we're not looking at things in the sense of price terms, because I want to go ahead and really view things on a valuation basis. As there's an increase in the supply of coins over time in pretty much any crypto, of course in Bitcoin, that level is getting lower and lower as time progresses. I want to focus in on the valuation range, because smart money, institutional investors, who we are expecting is going to drive the rest of this rally here as the range of financial products are coming in and as the range of exposure is growing for institutional clients. We need to understand what valuation ranges they're looking at buying. Because for them, they're thinking about, is this market at a point where it's going to be able to 2x, 3x, 5x? Am I going to be able to get a sizable return building positions right now in the market? So let's take a look at history here, right? What's really going on here with Bitcoin's market cap, right? Well, what we find here is very similar to price, that Bitcoin is doing something really, really interesting in this cycle. It's having these exacerbated rallies when it comes back up to the previous price point. And outside of that as well, we've been having these exacerbated corrections, right? These periods of peak fear in the market. And we really either enter into the overbought red range here, or we come down into the kind of oversold range that has generally throughout the cycle always been a discount range. And we're sitting there right now. Now, outside of that, there's also another really interesting technical pattern going on, and this is a signal that the bulls are in the lead. Don't let the sideways consolidation we've been in get you fooled that this is somehow a bear market. I want to be very clear with you guys. A bear market in crypto historically is a over 50% correction, likely somewhere in the 70, 80, 90% range. That's what a bear market is for an exponential asset like crypto. Instead, what we've been seeing here, all the while it's been a shaky 2021 and a shaky start to 2022, we've been setting in higher lows that are, interestingly enough, not only pretty consistent with one another, but if you take into account the previous highs back in December 2017, you'll notice that as we go through each of these lows, they line up each and every time. Buyers are coming in and making previous resistance, at a level previous resistance, ascending support. And that is a really good telltale sign. We're not making really lower highs, right? The highs are relatively consistent, these ranges here, but outside of that as well, the lows are getting higher. The buyers are paying a premium here. And it's showcasing that the market might be ready to turn back into forming the next uptrend, right? So again, when we take a look at the standard chart, this is something I always want to emphasize to people. You know, when you might see this like standard chart drawn here and you might think, oh my God, Nick, how could Bitcoin's market cap do this? Like, this is just absolutely insane. Well, it's also how it looked if you go back over time, right? And we go back through history here. It's also how this looked when it started to print on the chart. And that's why, again, you have to look at the logarithmic chart, because this asset class is really exponential in the sense of its growth. There is no asset class that's going to have the same kind of growth multiples that Bitcoin and other cryptocurrencies will have. And when we take a look at the log scale, when we're really thinking about it in the sense of the intervals or percentage points that the asset is making, what we'll actually find is that this ask we have here, this idea that Bitcoin could potentially rally up to $4 trillion sometime in October, November to December of 2022, what we're really asking for is just a 220% return from the previous all-time highs. The last rally we had from the previous all-time highs was a 392% move. Before that, it was a 359% move, and on much shorter time frames than what we're asking for here. Sorry guys, I don't know if you hear that noise, there's some noise going on, but I will not let that interrupt our analysis here. Now, what we can see here is that as we escape the overbought period, what I think we're going to have to do before we get the final spring up towards the end of the cycle, where we usually have our effective blow off top, like this really excited rally, I think what we're going to have to do is come above the previous all-time highs and make this general kind of green range here, or the previous resistance range, new support, where we really have that final spring up event, the euphoria that comes in. Now, to follow up on top of that, I want to focus in specifically on altcoin market cap, and I think the chart here is even more interesting than what we find here for Bitcoin. When we take a look at total 2, and you can pull this up on TradingView, this will give you a good visualization of the entire market capitalization of all altcoins, from Ethereum down to any other cryptocurrencies you can think of, like Dogecoin, Cardano, Solana Avalanche, anything you can think of. Now, what's really great about this is that there's a really interesting consistency that we find within the support range in the past, the consolidation phase, where we've really flushed through the bear market and the markets are just simply kind of pushing sideways, waiting for the next trend, waiting for buyers to start setting those higher lows and higher highs, building more confidence in price. Well, what we find back here, for example, in the 2014 bear market here, is that prices were generally pushing sideways. We had multiple retests here of this support range. And it wasn't until we got above this general consolidation resistance range, around $130, $140 million, and made it support here in June of 2016 and had the spring up here, that we really kicked off the cycle. It was clear confidence and sign of an uptrend here. And in that cycle, we saw in just altcoins alone a 1,270,505% return. Holy smokes. I mean, wow, that's a lot of gains for one cycle. So let's go ahead and understand what we always remind ourselves of. We not only want to see consistent technical patterns to see whether or not history can repeat itself, but outside of that as well, we want to guess, what kind of ranges can we really expect here for prices. So what did we see last time? Well, after the sell-off in the bear market here, we saw a little bit more of an expansive range. On the log chart, it's about the same range here, from 38 million to 143 million during this consolidation period, and about 40 billion towards around 120 billion, right? We just basically went up an interval, or basically a 1,000 multiple from the lows and the highs. So let's go ahead and observe what we saw here. Well, we saw the exact same thing. I got a zigzag through this consolidation range. We came up above the resistance range of the past, right? Treated it as support once more, and we leapt up in price. We kicked off really one of the first major cycles that put us back above the previous all-time highs. Now, we're sitting right now at about $1.12 trillion in overall altcoin market cap. This is taking everything in the market and subtracting Bitcoin's valuation. So we're over $1 trillion here, and a lot of people are curious about what really could we see going forward in the market cycle. What we're calling for in this cycle is for altcoin market cap to have a euphoric peak sometime, probably a little bit later. I got my dates wrong on the drawing here, but sometime in January, where we would come around $7.5 trillion. Now, I understand to some people, with the sentiment that's in the market right now, that might sound absolutely crazy. Like, Nick, how could we ever see $7.5 trillion? And I think the drill going on is saying, Nick, you're crazy. You got to stop all this crazy talk. Well, I think the reason why we can see 7.5 trillion is, as we take a look at the logarithmic scale, we can see just how much smaller of a return we're asking for here when it comes to crypto markets. First off, we've got a more expansive time frame here, whereas we're taking a look at the 2-week chart just for perspective. So each candle represents 2 weeks worth of price action. You can see that our rally in the past here was 57, right? Or if we double it in this case, we're talking about 114 weeks of price action. Whereas this time around, we're calling for around 148 weeks of price action. Right? Much longer time frame here, and on top of that, only a multiple of 20,900% from bottom to top, right? A lot more conservative than what we were expecting in the past of 127, or sorry, no, I keep mixing up. It's 1,270,000% in the past. Wish we could get those returns, but we're not gonna see that this time around, guys. And again, it's just a point here, and we can see this constantly when we take a look at Bitcoin, when we take a look at altcoins, any new asset classes, that you have really this opportunity to make really sizable returns because crypto is such a small market. Whereas if you take equities, for example, the concept of market to scale is much more difficult. Equities as a market as a whole across the globe is an over $110, $120 trillion market. In order to double again in value, it's going to have to go towards around $220 to $240 trillion. And I got to be honest with you all, I don't see that happening in the next year or two. Whereas crypto can make many multiples over because of its market size and its demand from millennials, Gen Z, and institutional investors that is still yet to materialize, right? So again, and if we even just, if you guys don't even agree with me 100%, right? Let's just go ahead here, right? We've got our chart here, right? And we just go ahead and plot a line from bottom to top, right? In fact, the only kind of argument you can make against the statement here is that, hey, we've been hanging above this trend line for a while. We might hit it sooner rather than later. This is exactly on trend here with what prices are doing. If not, it's conservative. And I think that that's an important point to keep in mind here, guys. We've been gun-ho on this idea that we are going to hit around $7.5 trillion in market cap for altcoins. And along with that as well, as we talked about, this idea that we're going to come up to $4 trillion for Bitcoin in this cycle. Now, why do I mention those numbers? Well, if you start to add those together, and I'm going to point out here why there's a little bit of a discrepancy, we have a target market cap for the entire crypto space, the peak value of crypto assets as a whole in this cycle, coming in at $10 trillion. This now is the total chart here. I'm going to go ahead and turn it to the 2-week here so it's a bit more digestible and you guys can see it well on the screen. This is our trajectory for going to a 5x multiple from where we are now. We're currently sitting a little under $2 trillion market cap. I think in this cycle, maybe not exactly at 10 trillion, but I think we're going to 9.5, 9.75, somewhere in that upper band towards the $10 trillion range. Now again, might sound a bit crazy, but if we take a look here at history, that's quite conservative to the kind of momentum we saw in the past. Right, from bottom to top here for Bitcoin in the past, we saw during this flash sell-off, right? 35,000% bottom to top here for the overall market. That's adding in Bitcoin and altcoins as a whole. From the absolute peak bottom of this bear market, we not only have had a lot more time added into the equation, right? More than an additional year here with our target range, but we're doing less than a third of what we did in the previous cycle in the sense of percentage returns. Doesn't sound so crazy, does it? Not too far-fetched, right? We've got decaying returns, expanding cycles, everything that we've been talking about for a long period of time. And again, that technical foundation where we come up, again, don't take this white line as like an absolute end-all be-all truth. No one has a crystal ball exactly as to how things will play, but I think what we need here, right, observing previous trends and what generally people look for in order to build the technical setup, what the institutions will look for to really drive the rally forward, is they want to see here that prices are turning previous resistance, right, into new support and rallying up higher. And I do believe for those who are curious about what this bear market will look like afterwards, going from a $10 trillion market cap euphoric peak, I think we're going to come down and probably to 2.5 trillion and make that range support again. We're going to remove the real secondary bull wave here, remove that euphoria from price and come back down to this range and consolidate for some time, which will be about a 75% correction versus some of the more intense ones that we had in the past. Each cycle correction has gotten a little bit weaker than the previous one. I think the first one was like 90-something%, then it got into the upper 80-something% range, and then the lower 80% range of the previous bear market. So we should expect that this is going to be not only weaker bull markets, but also weaker bear markets. Now, I want to get back to one point here before I forget. Some of you might be wondering, Nick, you take your targets here of $7.5 trillion for altcoins and $4 trillion for Bitcoin. Any of us can do the simple math. It's 11.5 trillion. Where's the discrepancy? You have this target of 10 trillion. Well, the reason I emphasize that is because I do believe no matter how it'll play out, whether it's altcoins or Bitcoin before, I have a feeling if we go off history, altcoins come after in the equation. But Bitcoin or altcoins are likely going to peak first. We tend to find, as we did in 2017, again, it's a limited data pool. We don't have an exact sign of this, but we do know that in crypto markets, in equity markets, in practically every euphoric market cycle of any given asset class, people are going to take more and more risk as you get towards the top. So what happens in crypto? Well, we saw it in 2017. As Bitcoin had set at its peak in December, it started to significantly decline in price as it started to rebound and, of course, was on its way towards making lower highs. The market was still euphoric. The market was greedy. The market didn't want the party to end. They didn't want to spill over the punch bowl, right? So they were starting to buy into the next greatest altcoin, and everything was up. Everyone was a winner in the market on paper until the music stopped about a month later from Bitcoin peaking. Right? And that's the key thing I want to drive here, which is that all the while Bitcoin might be declining in market cap, altcoins still might be enjoying the show. And I think we'll see that peak in altcoins, as you guys might recall. The differences here on the chart is that we've got it sometime in January, February, making that final peak in market cap. So what we'd see is a rotation of value from Bitcoin into altcoins. All the while here, we're really starting to hear sometime in maybe January, February, right? Having that final peak of market cap in the market. So this could really go in towards a year out from now, about 11 months. And I think that this is completely reasonable according to history. I know it's hard to see it sometimes, guys, when we're in this kind of state in the market where things are just a bit choppy and there's no clear trend. It's easier to bet on it when the euphoria has already arrived. But the smart money and the better investors are going to be buying in when it's not favorable, or at least it doesn't feel like it's favorable, because we know we're in the discount range here. I want to go ahead and highlight something. This is something that we talked about within the Dash report. This is our newsletter we do on the Data Dash channel that you guys can subscribe to if you want to support the channel. But we talked about this really important indicator here. This is one of the new indicators we have access to called the monthly returns indicator. And what it does is it measures the rolling monthly return of Bitcoin, right? So as of course we were back up to the all-time highs, Bitcoin had been up about, the monthly return had gone up to 53% month over month. Great returns, right? And vice versa, we find that during periods of correction and concern in the market, we go near towards the negative 28 to 30% range. And when we get below this green line here, right, the negative 30% range, we saw buyers coming in, right, as we tended to see in the past. This is usually a discount range. So if you guys are interested in this kind of broader analysis, if you find that my ramblings here on the channel are not enough and you guys want to get my insights on what coins I'm watching in the market, what ways you can get extra insights on crypto and equities and commodity markets and Forex, the whole macro perspective, and also see where I'm percentage-wise allocated in the crypto space, you guys can check out the Dash report down below in the description. It's a great way to support the channel. If you can't do it, it's no worries. Again, overall, we want you guys to just enjoy the content here on the channel. Now, one last thing that I do want to talk about here before I dive into preparing for the bear market is something that I find really interesting. So there was this article from CNBC covering a guy named Didi. I met him personally. He's a really interesting guy. Met him actually, and I think it was in Las Vegas at one of the cryptocurrency conferences right before the world went crazy in 2020 with the pandemic. And he basically is known for having the Bitcoin family. So Didi is a really interesting guy. He's from, I think, from the Netherlands. They're a Dutch family. Traveled all across the world, and they basically bet everything on Bitcoin. As recent, though, there's been this headline circulating around that they moved to Portugal in this case. And I know a lot of you are thinking, in regards to doing psychoanalysis, you're thinking about, okay, I want to buy on the lower phases of the cycle, and I want to be able to take profits at the top, right? There's nothing negative about that, guys. It's totally rational. It's what I want to do. It's what a lot of other people want to do. I love crypto as an asset class, but I'm not going to, let's just say that you're going to be on either side of the trade, right? You're either going to be buying high or buying low and selling high, right? So my major point here that I want to emphasize is that if you are looking to do the swing tradings, I know a lot of people are always worried about the tax obligations that can come with it when you take profits rather than just hodling long term. And the recent move that Didi and his family made is moving to Portugal where they have 0% taxes. Now, all the while, look, I'm not here in this case to talk about overall, like if people should do that, right? But I got to say, like if you're looking to limit legally your tax obligations, similar to moving to Portugal, moving to Portugal can be quite a big stride. So one thing I would emphasize, if this is something that's on your mind when it comes to trading on these cycles, is consider maximizing your contributions to a crypto IRA. And that's today's sponsor for our video, I Trust Capital. They're a partner here on the channel for a long time, and I'm a big fan of what they offer because not only do they have great customer support, but the idea behind a crypto IRA is that you can really start to limit your tax obligations legally from anywhere in the United States. And it gives you access to all the same cryptocurrencies. You can still trade actively by deferring your taxes. And you're able to get access to the same cryptos, get in and out of the market, and you don't owe any taxes at the end of the year, right? It's all tax deferred. So if you guys are interested, check out the link down below in the description. I Trust is a really cool company. But I want to go ahead and again, build on this point here on the bear market. I know that it's not fun to think about it, guys. But all the while we think about the optimistic short-term future and how markets still have room to move higher, we want to prepare ourselves for that bear market. And I think one thing, and I really love these kind of compliments, guys. Like, this is something that meant a lot to me in the previous bear market, is that, a lot of people who you're following in the space, a lot of people who are engaged in the crypto space, they kind of go away when the bear market comes. And you guys can take a look back, and I wasn't perfect in my analysis for sure, but if you guys take a look back and stuff, I'm going to be here during the bull markets. I'm going to be here during the bear markets. I'll try to keep things interesting as well when the bear markets are here, maybe talking a little bit of equities, finding other opportunities. You don't have to constrict yourself just to crypto. Crypto is one asset class. It's probably the most exciting one for the coming decade. But at the same time, there are periods where crypto is not so exciting. And you got to find those different reasons as to why you're either driven or excited about crypto. But at the same time, I would say that it's important to learn when things get you euphoric. There's nothing wrong about stepping away from your positions and selling your assets at the fair market value that someone wants to pay for, right? All the people who ignored you for a long period of time come in and say, oh, I want to buy Bitcoin now at new all-time highs around, $4 trillion market cap. So be it, right? There might even be people who have been continuously buying at the discounted ranges and still buy at the euphoric highs. People who dollar cost average, and get paid in crypto through Digifox. And there's nothing wrong with that, right? The great thing about dollar cost averaging is you're just passively investing. You're not trying to time the cycles. So if you're drawn to that, being more passive and not having to worry about this kind of technical analysis, mumbo jumbo in the market, right? It can sometimes come across as that. Again, there's all types of ways you can go about doing it. All I'm here to do is try to signal when I think we could be entering towards that cycle peak. But I can tell you guys confidently right now, whether it's my words or my actions, which are probably even more important, I believe that this market cycle still has room to go. I can say it straight to your face. I've got my money bet on it. I don't have any allegiance to the crypto market. I could sell it all tomorrow and go straight into cash and walk away from it all. I don't have any allegiance to crypto, but I do believe that there is serious room here according to the chart. Clear signs here with the higher lows we've been seeing in market prices and with the rebound we've seen here out of the lows. It's been one of the fastest we've seen here, right? Not as long of a sideways consolidation like we saw back here, even with liquidations. So anyways, guys, I hope more than anything this video has proven valuable for you guys. If you enjoyed it, consider dropping a like. And if you have listened this long and you love my rambling, which I sometimes wonder why, but I'm always thankful to you guys. I know sometimes I can go on a tangent. I always ask, if you haven't already, consider subscribing, hit the bell icon, and leave a comment. Whether you agree or disagree, I want to hear what you guys think about this cycle. We got to get a good conversation going on in the comments. We can only learn from one another, and I'm definitely no absolute thought leader in the space. I want to hear from you guys and learn from you. Maybe there's something I'm missing, right? But I digress. Thank you guys so much for tuning in. I'll see you all in the next video. Take care, everyone.